when everything collapses and interest rates spike and the dollar comes home, everything inversely correlated to a rise in interest rates, stocks, bonds, and real estate collapse, and so does the dollar as it's being globally forsaken. There's your great reset, almost 9% inflation on the CPI. These numbers are getting out of control. The amount of money creation kept going on and on and on. And by 2021, we were talking how 50% of every dollar ever created had been done so in the past year and a half. Those numbers have increased to 80% right now, with massive inflation continuing. Nigeria and Saudi Arabia will be selling their oil to Russia for yuan. But remember, all of these yuan payments, whether it be Saudi Arabia selling to China, whether it be Nigeria selling to China, whether it be Russia selling their oil, their gas, and their coal to China for yuan, all of these yuan-denominated payments are also convertible into gold on the Shanghai Gold Exchange. You're seeing massive gold accumulation by the central banks and repatriation by the central banks, and a trend that's gone on now since 2017. And so what we are seeing on a very, very large scale is de-dollarization. And there's a part of me that wonders, in the recesses of my mind, was this planned? Do they want to create an environment via weaponizing of the dollar? First telling their cohorts in the central bank community that there will be a day of reckoning. We're going to reclassify gold. So start getting your gold home and start buying it. We're going to continue to manipulate the price to run cover for you all to de-dollarize and reposition into gold and push people into finding alternatives. Look at what we've done by weaponizing the dollar and pushing the Russians into the open arms of the Chinese and their SIP system, the cross-interbank payment system. You have really incentivized people around the world who are wondering, are they the next person to face sanctions? Are they the next persons to be kicked out of SWIFT? To find alternatives. And when you realize that all of this money was created in the past few years, a good majority of it has found its way into financial assets. All of the assets in this country are inversely correlated to a rise in interest rates. On the other hand, you have the Federal Reserve claiming they're going to get tough on inflation. No, they're really not. They're not going to get tough on inflation. If they were, they would have stopped adding to their balance sheet after they admitted that inflation was transitory. They wouldn't wait until the next meeting in 45 days to start selling off what they say is going to be $1 billion a month in mortgage-backed securities and government treasuries. They would start raising rates now, and not by a half a basis or 50 basis points, but by 2 or 3%, 200 or 300 basis points when you see today's clip of almost 9% inflation on the CPI. These numbers are getting out of control. And I think that what you are witnessing is a massive form of de-dollarization. But could it be that it was planned? Could it be that they realized we've gotten so far down the road with 100+ trillion in funded and unfunded liabilities, with the inability to ever pay it back, to incentivize a mass de-dollarization? See, there's more dollars outside the U.S. than there is inside the U.S., as every country has to own dollars to buy oil. But if that changes, and now you can buy oil with yuan or with ruble or with euro or with local currencies, all these dollars come flooding home. We blame the Russians and the Chinese. We are no longer the scapegoat for creating the problem, just like Putin is being blamed for high energy costs. Yet if you look at it, prior to this happening, you had oil up, 50-60%, and natural gas way up. The energy prices were way up before the war in Ukraine happened. But now you have a villain. When everything collapses and interest rates spike and the dollar comes home, everything inversely correlated to a rise in interest rates, stocks, bonds, and real estate collapse, and so does the dollar as it's being globally forsaken. There's your great reset. Could it happen? I don't know. I mean, it sure seems like it's a possibility if the dollar was forsaken to that degree. And it seems by the weaponizing of the dollar and all of the pieces that have been put into place along the way that indeed that indeed this is exactly what is happening. And you take a look at something like the nickel market, where 120,000 ton nickel short position brought the LME to its knees, which represented like 1.2% of the global mine supply. Just the short position on COMEX alone in silver represents about 10 times that, let alone the OTC position. You're talking nickel position on steroids. And is it because the government just won't let the price of gold and silver take off because it is the canary in the mine shaft? I'm not quite sure. People who are frustrated about price not behaving with all of these things happening just need to have patience, because it's going to be one of those moments where we wake up to a new reality on a Friday night, it happens, or on a Monday morning, we wake up to a new reality where the dollar is no longer the single world reserve currency. Heck, even our Fed chairman came out a month ago and said there is room for more than one world reserve currency. Globally, when the world has awoken to inflation, not just here in the U.S., but everywhere, and to fascist governments and to edicts that can lock you out of a system, people are waking up. I would argue that there is a tightness in refinery capability, but I would also argue that there is far more demand than there ever is. And I think it's just a real easy, convenient way to say that the refineries can't keep up. When I look at my inventory and see 4, 5, 6 weeks out on sovereign mint coins, to me, that is not refinery capability. These governments, when you look at these governments, the only thing that they do that's profitable is sell gold and silver. I mean, to a degree. I mean, it's one of the most profit center driven areas of the entire U.S. government, and yet they can't keep up with demand, nor can any of the other mints. We're going to wake up one morning, if I had to bet, to a new reality where the dollar is challenged for its singular world reserve status. And then you will understand what supply chain problems really are. Then you will understand what price inflation really is, as the dollar is dumped and interest rates spike, and there's a leveling of the playing field as all of these asset classes come pummeling down. That's when you see gating in money markets, as we've talked about before. That's when you see bail-ins with banks, as we've talked about before. Try to get a hold of Fidelity when the house is on fire to get out of your position. The proactive nature of what we are talking about is massively important. And all of the supply chain and shortages that I've been talking about, they haven't been today, but every day it only reinforces my feeling that it will be the defining factor in this industry.